Have you ever wondered how the stock market works, or perhaps you've pondered why companies create shares and get listed on the stock market? Let's start by imagining the stock market as a bustling marketplace, not for fruits or clothes, but for ownership in companies. This is where shares come into play. Picture a share as a slice of a company's pie. When you buy a share, you're buying a piece of that company's pie, essentially becoming a part owner. But why would companies want to slice up their pie and sell it off? It's simple. They do it to raise funds, to grow, to innovate, and to make their dreams a reality. And where do they do this? They do it on the stock market, a stage where they list their shares for anyone to buy. We'll wonder no more. Today we unravel the mystery behind the stock market, shares, and company listings. Now, what exactly are shares? You might have heard the term thrown around a lot, but what does it mean? Well, let's dive into it, shall we? In its simplest form, a share represents a slice of ownership in a company. When you buy a share, you're buying a piece of that company, its assets, and its future profits. Think about it like a pie. The company is the whole pie, and each share is a small slice of that pie. The more slices you have, the bigger your piece of the pie, or in this case, the company. Now, why would a company want to divide itself into millions of little pieces? Well, it's a way for them to raise money. When a company sells its shares to the public for the first time, it's called an initial public offering, or IPO. This is often a way for companies to generate the funds they need to grow and expand. But what's in it for you, the shareholder? Well, the hope is that the company you've invested in will grow and become more profitable over time. As the company's value increases, so does the value of your shares. And if the company decides to distribute some of its profits back to its shareholders, you'll receive a portion of those profits in the form of dividends. The amount of dividends you receive will be proportional to the number of shares you own. And there's more. As a shareholder, you're not just an investor, you're part owner of the company. This means you have a say in its future. Companies often hold meetings where shareholders can vote on important decisions. The more shares you own, the more votes you have. But remember, shares can also decrease in value. If the company doesn't perform well, the value of your shares can go down. And if the company goes bankrupt, you could lose your entire investment. So, investing in shares carries risk, but it also carries potential for great reward. So, in essence, when you buy a share, you're buying a piece of a company. You become a shareholder. You own a slice of that company's future, and you share in its successes and its failures. But why do companies create these shares? What's in it for them, you may ask? Well, let's delve into that. Imagine you've started a company. It's doing well, but you're dreaming bigger. You want to expand, maybe open a few more locations or develop a new product, but all of that requires money, capital. So where does this capital come from? This is where shares come into play. When a company creates shares, it's essentially dividing ownership of the company into multiple pieces. Each share represents a fraction of ownership. These shares can then be sold to investors who give the company money in exchange for a piece of the ownership pie. This process is known as equity financing. The money raised from selling shares can be used for a variety of purposes. It could be used to fund expansion plans, reduce debt, or invest in research and development. It provides the company with the necessary capital to grow and expand without having to borrow money and pay interest. But it's not just about raising money. Creating shares also allows a company to distribute ownership. This can be an advantage in several ways. For one, it can help spread the risk. If a company is solely owned by one person or a small group, any financial trouble the company encounters is their burden alone. But if a company has many shareholders, that risk is spread among them. Furthermore, by offering shares to the public, a company can attract high-quality employees by offering them stock options. This can be a powerful incentive, as employees who own shares in the company may be more motivated to work hard and contribute to its success. So, to circle back to our original question, why do companies create shares? They do it to raise capital, to expand their business operations, and to distribute ownership. It's a strategic move that can fuel growth and spread risk. By creating shares, companies can raise the funds they need to grow and thrive, while also sharing the risk with their shareholders. So, we understand why companies create shares, but how do they get listed on the stock market? It all starts with a process known as an initial public offering, or IPO. This is the first time a company sells its shares to the public. But before a company can launch an IPO, it must meet certain requirements set by the Securities and Exchange Commission, or SEC. These requirements include having a minimum amount of assets and shareholders and being able to provide audited financial statements. Once a company meets these requirements, it works with an investment bank to determine the pricing of the shares. This involves a complex evaluation of the company's financial health, its future growth prospects, and the current market conditions. The goal is to find a price that's fair to both the company and the investors. After the pricing is determined, the company and the investment bank start a roadshow where they present the company and its shares to potential investors. This is the company's chance to drum up interest and convince investors that their shares are a good buy. Once the roadshow is over, the company and the investment bank finalize the price of the shares based on the feedback and interest they received. Then, the shares are offered to the public on the day of the IPO. The shares are then available for trading on the stock exchange. This is when you, as an investor, can buy the shares. And voila! The company is now listed on the stock market. But remember, not all companies that apply for an IPO get to list their shares. The SEC has the right to reject any company that doesn't meet its stringent requirements. This is to protect investors and ensure the integrity of the market. So getting listed on the stock market is not a walk in the park. It's a rigorous process that requires a lot of preparation, compliance, and financial acumen, but the rewards can be significant. Through the IPO process, companies can sell their shares to the public and become listed on the stock market. So, now that you understand how the stock market works, you might be wondering, what's next? Well, the next step is to harness the power of investing. Yes, investing can be a game changer for your financial future. You see, when you invest, you're not just buying a piece of paper or a digital entry on a screen. You're buying a piece of a company, a stake in their future. And as they grow, so does your investment. Imagine for a moment a tree. When you plant a seed, it doesn't become a full-grown tree overnight. It takes time, it needs water, sunlight, and nutrients from the soil. It faces storms and droughts, but with time and the right care, it grows. It blossoms, bears fruits, and even provides shade. Investing works in a similar way. It's not about instant gratification, but about planting seeds for the future. Your investments are those seeds. They might face storms in the form of market volatility or droughts when a company doesn't perform as well as expected. But with patience, resilience, and a well-diversified portfolio, your investments can grow, bear fruits in the form of dividends or increase share value, and even provide a financial safety net for you and your family. But the power of investing goes beyond financial growth. It also gives you the chance to support companies you believe in. Every time you buy a share, you're voting with your money. You're saying, I believe in this company, I believe in their vision, their product, their leadership. And that in itself is a powerful thing. So, think about it. What companies do you believe in? Where do you see potential for growth? Where would you like to plant your seeds? Remember, investing is not just about making money, it's about growing your wealth, supporting businesses you believe in, and shaping the future. Investing in the stock market can be a powerful tool for financial growth and supporting businesses you believe in. But don't just take my word for it. The stock market is a vast, dynamic realm brimming with opportunities, and it beckons for your exploration. It's a journey that begins with a single step, and there's no better time to take that step than now. You may start by reading up on investing, from books like A Random Walk Down Wall Street to various online resources. Websites like Investopedia offer a wealth of knowledge to beginners, and financial news sites provide real-time insights into market trends. Consider signing up for a brokerage account, which will serve as your gateway to the stock market. Many platforms offer demo accounts, allowing you to practice trading without any real money at stake. Engage in forums and communities where investors of all levels share insights, strategies, and experiences. The world of investing awaits you. Dive in, learn more, and take the first step towards becoming an investor today. Before you set off on your journey into the world of investing, remember one thing. Knowledge is power, but shared knowledge is even more powerful. If you found this video helpful, please give it a thumbs up and subscribe to our channel. This is not just a call to action for you, but also for anyone you know who might be interested in understanding the stock market. Share this video with them. Together you can embark on this exciting journey, supporting and learning from each other. Don't forget to hit the notification bell to stay updated on our future videos. We've got a lot more insights and tips to share with you. Thanks for watching, and here's to your future success in investing. Happy investing!